Hi guys, this is Radhika here and we are back with another video. So in today's video, we'll be talking about how to start trading, what are the steps you should take if you want to trade in the markets, if you are just a beginner, if you have never seen a chart in your life, if you have never traded in your life, what should you do, what is the first step, what is the second step. So that's what we are going to know today. So let's get started. So just some disclaimer, trading is not something a quick money hack or something like that. If you are getting into trading, make sure you are getting into it because you want to follow it, because you enjoy doing it, and it is lot about consistency. If you think you just learn some videos and you'll get started with trading, you might end up making a lot of losses. So if you actually want to take up trading, take it up, learn everything about it, follow it consistently, and only then you will be able to see like long-term good results out of it. So don't get into trading if you want to fall for the trap of quick money. Don't do that. Apart from that, trading involves a lot of discipline, emotional control and patience. So make sure that if you are getting into this, you are advised to have patience, you are advised to have discipline, and you actually follow it. And the last thing is, whatever amount you are actually deploying for the trading thing, you might end up losing it. So just be cautious of the decisions that you are taking. Go in if you actually enjoy it. Don't go in for just having some quick money out of it. So now let's get started. Let's first understand what are the kinds of tradings that you can do. So that will give you some more idea of what you actually want to do. So there are three kinds of tradings. First is intraday, short-term trading, and long-term trading. So intraday meaning trading within one day. That means you might buy a share in the morning or in the afternoon, somewhere around that, and whatever the price is during the close, you close the trade at that time or anywhere during the day. So you don't extend your trading period beyond one trading day. You do this because in the stock market there is the settlement period is always transaction plus 2 days. I think now it has been shifted to transaction plus 1 day, that is T plus 1 or T plus 2, right? So in this case, if you buy today and if you don't close your position by the end of the day, you might have to take delivery and then actually go on and give the delivery. So there might be some problems. Basically in the intraday trading, you don't have to take the delivery of the stocks at all. So that's intraday. So at times intraday trading becomes a little difficult because you need to take very quick decisions, because you need to close your trades within that day itself. Now moving on, the second type of trading is swing trading or short-term trading. Now here you might hold your position for anywhere between 1 day to 1 week. That's the approximate amount of duration of time where you can take your trading decisions. So for example, I actually bought a share today. I do have some time today, tomorrow, day after, like 2-3 days from now to close my position. And the last one is long-term trading. So a lot of people trade for like months. So maybe they might buy a share today and they hold it for like 3 months or 4 months, and then by the end of 3 months they close their position. So that is another way of trading. Now what all markets do you have to actually trade? The first one is cash market or spot market. So the next thing is, what markets can you trade into? So the first one is cash market, or we also call it spot market. This is very simple. This is the the normal stock markets that you might hear. It's very basic. You buy a stock and you sell it the other day, or whenever you want to. So that's spot market, current markets, right? The current live markets. The second one is futures and options. It is also called derivative market. Now as the name suggests, futures, it is not the spot market. So basically the instruments that we have there are their prices fluctuate basis the future of the stock. So maybe if you are buying a future of Asian Paints, that future is an instrument. That future denotes what the market thinks about the price of Asian Paints 1 month down the line or 2 months down the line. So futures and options is not a spot market, it is a derivative market. You should read about these terms as well to decide which market you want to trade into. And the last one is, apart from stock market, you also have some other options such as currency markets or commodities markets. You can also trade in those markets. So moving on, let's come to the main point. How should you start with it, right? So let's start with the first one. So the very first step is to open a DMAT account and set up your trading system. Very simple, you just need a few accounts, so I'll explain you. So a DMAT account is an account where you hold your shares. Just as in a bank account you hold all your money, DMAT account is where you hold all the digital shares. So shares do not come in a paper format, right? They come into digital formats. They're issued into digital certificates. So you need some place to hold them. You need some account to hold it. That is what DMAT accounts do. So the first thing is you need a bank account. Second thing is you need a DMAT account, and the last one is you need a trading account. So now let's understand how these are all connected. So first you have your bank account. The bank account is connected to the trading account, and the bank account is where you can allocate whatever amount you want to allocate to the trading account. Trading account is very similar to bank accounts, but this trading account is used for all the transactions that you are doing with the stock market. So if you are buying a stock or you are selling a stock, everything will be executed through your trading account. Now whatever stock activities you are doing, all the money is going to come into the trading account, but all the shares are going to flow through the DMAT account. So that's how the system works, and these are the accounts you would need to get started with it. Now the second step is to set a budget aside. You obviously, if you want to get into trading, you need some amount to actually start trading with. So anywhere between 10,000 to 2 lakhs, this is the range that you can start with. Obviously with going forward with learning and everything, you can keep increasing the amount as well, but anywhere between this amount is a good amount to start with. Another way to figure out the amount is you can keep aside 10 to 20% of your monthly income, right? So if you whatever amount you are earning, you can allocate 10 to 20% of that. Just keep in mind, whatever amount you are allocating to trading, make sure that even if you lose that money, nothing is affected in your financial life, right? So just make sure, because initially you are bound to make a lot of mistakes, so make sure that whatever amount you set aside, you are okay if you lose it. So the third step is to understand all the tools and strategies that are available, to learn about them so that you can actually start trading. So the tools that you should be learning about is, first is candlesticks. You might have seen diagrams like this or charts like these, whenever you see any trader's system. So this is used to basically understand how the charts are performing or how that particular stock is performing. So candlesticks is one thing that you should read about. Second is moving averages. Moving averages is a tool. It's more like a line graph. It denotes the average price of last 20 days, 30 days, or maybe 2 days, depending on the moving average you pick. So that's the second thing. Then you also need to understand about indicators and oscillators. Apart from that, learn about price actions, and lastly learn about chart patterns. Once you have learned about these 5 tools that you can use, you will be able to predict what the stock prices will go. Now how this works is, basically in a stock, whenever you see a chart, a stock will always follow a pattern, and it is said that history repeats itself. So whatever patterns a stock has been following, it is very obvious that it will follow the same patterns going forward. Now to identify these patterns, we need certain tools. Those are candlesticks, moving averages, and price action, and so on. But what we need to do is we need to find patterns using these tools. The tools that I mentioned will help you understand the patterns, and once you can understand the patterns, you will be able to predict what you should be doing next. So moving on to the fourth step, the next thing that you need to do is create a strategy. So once you understand all the tools that we discussed earlier, and once you understand what are their implications, what signals do they give, how do they help you, you need to figure out strategies for yourself. Now what are these strategies? Basically every trader has his own strategy. Somebody else will use a moving average and combine it with an RSI or maybe some other indicator. So every trader has his own strategy. Some people might just use candlesticks to trade. So what you need to do is you need to find out which tools you are comfortable with and what tools do you rely more on, and basis that you can start preparing your own strategy. Mostly be a combination of 2 to 3 tools that you use at once. So start building your strategy. The fifth thing is, once you have your strategy, you need to start testing it. How do you test it? Start with paper trading. So you need to paper trade every single day. Paper trading is very simple. You basically go to the live markets. You don't invest your money, but for example, you want to buy one particular stock at a given price. So you write it down on your notebook that you bought this stock at this price, and basis your strategy, you also set a stop loss and things like that, and you see how your trade goes through. So basically you are not actually trading in the markets, but you practice it on the paper so that you don't make mistakes when you actually go on with your real money. So when you are actually using paper trading, measure your returns, measure which strategy is working and what returns you are able to generate with that. So that will give you a good idea when you actually get started with the real money. It will also give you a lot of confidence also. Follow this method of paper trading for at least a month or two before you actually start investing, because it is very important for you to have conviction on your strategies and have confidence as well. Moving on, once you are clear with your paper trading, you have developed confidence, you can then start investing your real money, the budgets that you had set aside. You can start investing that. Whenever you start with it, start with small amounts. Don't go in and buy a lot of 2 lakhs or 5 lakhs. Don't do that. Start with small amounts, trade small initially, and slowly you can build it up from there. When you're doing this, keep records of everything, do it on a consistent basis. Once you're doing this, you will eventually, with markets, you will learn a lot. The last thing is to keep learning apart from the markets as well. Do invest some time in taking some courses maybe, or reading some books, or learning from some mentors. Keep learning as an important part of it, because once you are in the market, you will face a lot of emotional stresses, or you would want to try out other strategies. So keep testing, keep learning along with that, and you will obviously, with time, you will grow in the market. To excel in this, you need to have discipline. I'm repeating it again, but it is very important to follow the rules that you've set. Don't cross the limits that you've set for yourself. Follow the rules, be very disciplined, be very patient with the markets. One trade here or there can really cost you a lot. So keep that in mind, and you will be set on your trading path. So for now, start with the things that I've mentioned and you'll be good to go. So if you like this video so far, do like, share and subscribe. Also, you can hit the bell icon for to be stay updated. Thank you.